So, ZELLA, nice. What time frame is best for determining supply and demand zones? All of them. All right. All right. So on ZELLA, for example, generally, first of all, if you look at my timelines, I have the weekly 20-year, the daily 10-year. All right. So generally, when you're looking for a name, you want to go back to some information on the chart that's happened already. All right. That way you can get like a better gist of how it may trade, like what's the ticker personality, et cetera, right? ZELLA had some decent momentum yesterday and for the past week it looks like. All right, so for example, ZELLA obviously over this level, I guess I traded on this day. There's a little square there, and there's a bunch of shit. Let me clear this drawing set. Excuse my language as well. All right. So generally speaking, you want to go through and chart your chart. As a matter of fact, I want all of you guys that are participating to read my thread and send me this ZELLA chart charted out with high reaction candles. All right. And I will let you know if you're doing it correctly or if you're doing it my way. Doesn't mean it's correct. Do whatever you want to do. All right. So when we're looking at ZELLA on the weekly, obviously we have some in between this 2-8 range. We have a high reaction sell here around this 3-8 range, and we have a lot of touches here. We have some here around 215, 217, right? And then we have the 250. So if we go to the daily chart, we can see how those translated. So you have the 280 right here, right? Where's the 255, 250? It's about right here. Obviously, it wicked up here, crashed under it, broke above it here, retraced here, pulled. All right. So when we're looking at it on the daily, the intraday chart, I guess you could say, right? For ZELLA, it had a pretty decent move today. Actually, I was trading options all day, so I didn't play a lot of momentum names until end of day. But this is more of a time and price action kind of thing, right? And I'm going to explain that right now. So the parallels here are the same as the parallels here. See these? Right? These outlier candle sizes are the same way that something can proceed through a price, it can decede through a price. All right, so that's the first thing that you guys need to understand. Can be on. Oh, yeah, he's answering someone else's question. All right, so that's the first thing you need to understand. So remember, anything under these outlier sizes are all relative or under relative action, right? So this, all of these, relative action. All right. So when did the sentiment change to short? I'm assuming that was the question, right? It was bullish sentiment up until because there was a 50% retracement on a large range of green candles. All right. So let's look at the demand and how the demand proceeded from the beginning. This will be the first video recorded for time and price action, by the way. So hopefully someone's in MTA is recording this because it'll be hell to write it.
We got Broda. Broda's recording. All right. We missed the first couple minutes, though.
It's all good.
Thank you, Broda.
That was a completely different lesson, so that's fine. So, all right. Let's start from the beginning, and I'm going to explain to you guys how to understand what exactly is happening with time and price action. All right. First of all, it's your ability to see how demand is proceeding to it, like with a certain price at a certain amount of time. Which is why, if you guys have been in the momentum chat, we can tell exactly when something's going to pull back at open, exactly when something's going to run at open, exactly when it should bounce, exactly when it should sell, and the exact price that is going to happen at, right? So it's time and price ratio, which also comes into time and sales and also helps with volume. All right. TLBT 1.1 break says column. So if you guys are trading, be sure to get your money. Don't, make me hold you back from making your money. All right. So here we have a little nice trend. The first one happens right here. This is where the demand slows down. All right. So this one happens at 9:30. This one happens at 9:55. And this one happens at 10:15. All right. So if anyone's decent at math, we can generally see what in which time that's going to happen, where it should bounce back on this trend based off of how it's trading. All right. So this, I guess we could say 10 o'clock, 9:30. So 10:30, it should retrace, right? And it doesn't. So this is a delayed one, aka it's overextended from that trend. If that makes any sense. 9:30, 10 o'clock, 10:30, it should be on this trend. It's not, right? Because the demand exceeded the price, aka it's overextended, so it needs to retrace. You should expect a pullback there. Firstly, all right. This is the beginning. So let's say we don't have any of this information, and it's just morning time, and we're like, oh, ZELLA, we're looking for the pop, we're looking for the pull, whatever. All right, let me pull up how my chart actually looks in the morning, so we can see what's going on here. Ooh. All right, so firstly, on the 1 minute, we can see that it's trading along a certain amount of time. You won't be able to see this on the 5, and you won't be able to see this on the 3. You won't be able to see it on the 10 if it's happening in short increments of time. All right, so that's first off. So this first 15 minutes that you're waiting for on the 5, firstly, as we just spoke about with candle ranges and things of that nature, you could already tell that there was going to be a pullback here. First outlier candle, second one, not as big, right? And this one is even smaller. So that means that the buy pressure is slowing down, aka the candle sizes are getting smaller. All right, so expect the pullback because the presence here is happening for two reasons. One, either people are starting to add to their short, or two, your buyers are now one slowing down their buys, or two, scaling out. And the level of buys that are coming in at this price are not as large as they were here. All right, simple psychology. All right, so here to here, obviously the sentiment isn't the same. So if you look on the 1, you can see you get wick rejection, then it pulls back, no range. So there goes that indecision, or some scale outs happening, or obviously, as we said, some slight adds for the short side. All right. So 1, 2, 3, nice. Range is starting to obviously get smaller, so chances are there's going to be a pullback. All right, but when was this supposed to happen? So if we look at the 1, hold on, let me take the off. Will do. Wait. I love Broda. Broda's my guy. All right, and H2 and column 2 before you fucking start killing me. Excuse my language too. You might have to bleep some of this out. I don't know if it'll work on you. But here, right? This is our first line. Okay, so the moment, and again, it's through your action, right? You're like, well, the fucking line is through the action. Yeah, it is. 1, 2, bounce. So here you go. It's bouncing off of 1 minute. This is the first one that cracks away from the trend, so you expect it to continue, but then it retraces and comes back to 1 minute. So that means at this time, at 9:31, the demand started to rise a bit, right? This was more trading on a 30-second, and if we have a 30-second chart, which we don't on TD, you guys do on TradingView and things like that, you would have been able to see a huge candle here, right? But it retraces, it comes back to the 1 minute. Now this line is through the action, so you're like, oh my god, this is weird. It's through the line. Yeah, it's through the line because it's no longer trading as fast as it was before, right? AKA, here's the dip here, here's the dip here. Simple math, all right? The demand is no longer trading on a 1 minute basis as fast as it was before. That means the demand has slowed down. So if it was 1, 1, 1, 1, 1, it'd be 1, 1, 1, 1, 1, 1, 1, 1, 1 minute candles, all creating higher lows. It doesn't do that, right? So it trades sideways here, cracks up, and now, just as Ace showed you in his photo, right? This upper linear resistance is now the area in which it would need to crack before, obviously, to get back on that 1 minute frame. All right, so let's. Yeah, wait, anniversary. Oh, happy anniversary, bro. All right, happy anniversary, GUP. Another one of my guys. So as you can see, the demand slows down there, and then it's trying to crack back over that on the 1 minute, and you can see that. All right, but on the 5 minute intraday, you're not going to see that. You're just going to see wick rejection pull down. So you've already known here that the demand was slowing down based on a 1 minute. So maybe potentially it's trading on a 3 minute or a 5 now, right? So it slows down here, trades sideways, it cracks above, and then it falls back. It ultimately comes back in to that same area, right? Now, how do you know where that add position is? Well, the same way I showed you how it was long or short before when this session first started. If you look at the short side candles here, right, and this, let's say this right here was our sell-off. What time was it? 45. So that's right here. At 45, this is our high reaction sell on the 5. Okay. Now, this level, in order for more money to be had or made, it needs to crack down even more, right? So think about that psychologically. Okay. If that becomes the underlying value, anything above this, right? This short is red. All right. So again, boom. Well, here first. And this is the linear line. Cracks, doesn't even attempt, obviously short. All right. Touches it, tries it, third one doesn't. Bearish engulfing. The answers are in here since 9:41. All right. So if you haven't added yet, there's no reason to rush and be like, oh, I need to add it right now. Wait for the sell. Here's the pull. And when it pulls, it's pulling off of this decently big candle, which is higher than relative, correct? It's bigger than this one. 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 It's bigger than all of these. It's higher than relative. So at the moment, this is an outlier candle, just as this is. You can fit 2 of these in this one. So this sentiment on this candle is stronger than these. All right. So in order for it to continue, this needs to be pushed down, right? But as you can see on the 1, these candles start to get smaller and smaller to the short side to this exact area in which you had a close here, an open here, and where it pushed down. All right. So that means that now it's basing out here. The value is probably at that level, which is here. What is this? Hold on. Let me slap it in because, again, no glasses, so I can't see the entire right side of my screen. 291. All right. So shares are being added at 291. This is your accumulation. Now, remember, I said 2 consecutive closes over said level. 1 here, long, 1 here, after a high reaction sell-off, and it's at a level of support. Okay? 1, 2. 2 consecutive closes, not to mention a base out and an underlying value change. So it holds that level. Okay? So how do we know to scale if we're in here? Well, it pops, again, and on the 1, right? On the 1, it pops. And before we even did this, we already saw what it was. Someone just sent me a message or something. You knew that this level you could have scaled at. And then obviously you could scale a little bit more here, and then it comes back down. Because remember, the demand slowed here, right? It should have bounced, and this candle right here should have happened here. But it didn't. It took a little bit longer. And again, same exact from the first part of the lesson. The first one doesn't matter. The second one can be a trap. So the second one, if you just added, you're red all the way to down here. No matter where you added on this candle, unless you got the immediate bottom right here, you're red. All right. So again, demand slowed down on the 1. Pretty easy to see. Scale some out there. Okay. Now, it retraces, comes back down to here. Whoa, what the fuck, TD? I mean, what, TD? Sorry for the cursing. Do you use any indicator ALEC assets? Oh, anyway, so it retraces here, and then obviously you can add your shares here, and your stop would be near this level, right? Because below this, obviously, it's going to get flushed out, or you're going to get smoked to about like right here, and then ultimately, if this doesn't hold, it's going to fall to about here. Okay. So this is a pretty decent add because you had a high sell, a high reaction sell, and you had 2 consecutive closes above that level. Not only did you have that, but you had a base out there. and the short side shares per minute started to get smaller and smaller. 3 bullish indications for a long. Right? Pretty easy answer. So there you can add your shares. Boom. Right? It starts to pop again. So if we're looking here, what was this, 10 o'clock? So yeah, 10 o'clock. So if you're looking at 10 o'clock here, and we're going off of this, right? At 10 o'clock, technically, this right here is the first break of this level. So if you were looking at consolidation, or you're like, oh, this is a consolidation range, technically, right? If we want to go based off, stop it, TD. That's annoying. If you want to go off this candle right here at 10 o'clock, is the first breakout of this consolidation. Why is it a consolidation? It's a consolidation because this range, in which caused the high reaction to sell, could not break below this level, and every time it tried to, it was bought back up. The difference between a consolidation and a capitulation between accumulation and distribution is that every time it hits this upper range, it sells to the bottom. Every time it hits this bottom range, it hits to the top. All right, that looks completely different, and that's why people get caught all the time adding in these areas, because they just don't know the difference. They can't tell the difference. I teach it all the time in the momentum chat. They're like, oh, it's consolidated. I'm like, no, it's not. Boom, and it fails. But anyway, so here's the first break, technically, right? And this is at 10 o'clock. So when we're looking at this trend on the one alone, even on the one, and I don't want you guys trading on the one because you probably don't know what you're doing, honestly. Okay? The first crack here is right here. So you know the demand slows right here. And if you look on the 5, that's where your pullback happened. At 10, 10, 10, 12, and 10:05, it looks like. 10:05. So yeah, 10:05 to 10:10. So this one's at 10:10. Correct. All right. So 10:05 to 10:10, that's your 5-minute candle. So you know, as this happens, and again, you're looking at the long side. Again, outlier candles long. This one's bigger than all of these in here, and you could fit 2 of these in here. 1, 2, pulls back, tries to pull back the trend, continues. And as you can see, the size is getting smaller, right? So that means in transaction, the buys aren't coming in as fast anymore. So scale. You scale some out. Boom. It pulls down. Here's a pullback. No problem. What do we like about this pullback? Especially if we're long and it just broke out. Well, the first candle on the breakout is a great sign, especially if we add it here. The second one is a retracement. Is it 50% of the candle? No, it's about 35, right? Maybe 30, maybe 50 is about here. Okay.
So James, smaller retracements in general are just good if you're either bullish or bearish?
It depends. I'm going to explain that as we continue. So, great question. Keep that on your mind. We'll get right back to it. So the retracement happens, but yes, generally speaking. But it depends on the situation. So pullback here happens. 50% would be about here. It does not do that. All right. Double top, clearly going to pull back, whatever. You also saw it here. You knew that the demand was slowing, right? You can scale some the moment it hits here. This is at 10:05. The moment that the candle opens, you already see it. So you're gonna wait to here to scale. Up to you. Pulls back to here, then pulls all the way back to here. And again, it's also a great sign because our first high reaction sell was that candle right here, which we were able to keep the base value at. So if it retraces to here, as long as it doesn't get under here, we should be okay. Under here obviously pushes back down to here because they can just accumulate more to here and below. All right. So we get a retracement, 50%. Bullish indication 1 here, bullish indication 2, bullish indication 3, pull back. Bullish indication 4 would be the fact that it did not come back into this range, not the fact that it pulled back here and then obviously you got this little doji friend that you got. All right, that's not the third one. You need to understand what was happening before, and every micro transaction is an answer to the biggest picture of the trade. And again, no answers for us. All right, so pulls here. Now Again, you knew you could scale some here. So what are you looking for here on that pull, right? Again, look at the short side sentiment. Boom, 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 smaller, boom, longer. Technically, on the one, if we're looking for demand to proceed, here's your first break. And this is only on the one. If it's pulling back on the one, you're just looking at this candle on the 5, which is fine. If you're looking on the 1 and you see demand slowing, you want to see it hold above this previous level. You want to see it hold above this previous sell level because you know you're okay, right? But if it pushes below that, then, obviously you're just going to start losing more of your profits because we added down here. You're going to start losing more of your profits. And if they push it down here, you're red. So there's that. All right. So, boom, you see the demand slowing, you scale here, and you can see that since right here, right? Breakout, boom. This one happens, boom, smaller than these. This one's even smaller than that one. This one's even smaller than that one. Not to mention the trend in which it's trading per minute cracks right here. Okay? Simple math. Well, that's not math. Simple eye exam, I guess you could say, eye test. All right, and even if you didn't do that, you could do these, and then it cracks again. So either way, the demand does not stay the same. So it slows down, cracks out, right? Is there a retracement here? No. It pulls back to this candle open, decent. Never comes back to previous support, which is here after this. So break, pull, higher low, and just more continuation. The demand never left. The demand tapered off here, right? But not enough for you to cut your entire position. It tapers off, you scale here, it comes down, and as you can see on the pop, there's really no sell pressure. The candle sizes never get bigger than these relative sizes. If they were to start turning into these, then it'd be something to look out for, but it never happened. All right? So demand slows down, but supply does not proceed. Supply does not come in and change anything as to what the sentiment is, right? Because the sentiment is long. The sentiment has been long since here. Boom. You would think that it was here, but obviously you need to see the other side before you can just decide, what the sentiment is. The sentiment is long. So you get the crack out, boom. Obviously here, when you're looking at it on the 5, because you already had your answer on the 1 before this candle even happened, right? Because realistically, in hindsight, you're going to be like, oh, well, the trend was here and came all the way here. Let's be real. This candle's not here yet. All right? So you need to be able to see the picture as to what's happening. This candle never happened. So now that you have that info, you have your info. See the difference? Now that you have that, and again, when it becomes second nature, this will get much easier for you. But now that you have that, you can now see the time that we were talking about. Retrace to that trend at 9:30, pull that at 10 o'clock, right? Or 9:55. You know that at 10:30 or 10:25, it should retest that level. And if it doesn't, obviously it's overextended. Simple, right? Boom, 10:30. Overextended. It should pull back at 10:30. It does. And this candle's bigger than this and this, but it doesn't pull back to trend as of yet, and it's delayed. So now it pulls back more than you would have wanted it to. If it would have pulled back at 10:30, then it would have just continued to go from there, but it didn't. It's delayed. So at that moment in which it's trading, during that time, it's overextended. All right. So if you look at that on the 1, just like we have right here, bounces. Remember, it's a continuation of this trend. So it bounces. Well, let's zoom out a bit so you can see bigger picture. So boom, and then dance, and then dance, and then gone. Then once it cracks it, obviously it has to fight back above it. But anyway, hold on. Let's get back to what we were. All right. So demand slows down a bit. Obviously you can see that here once you can identify the time in which it should retrace, right? You know that's a little bit overextended. That's perfectly fine. look at it on the chart. So here, obviously, you get a pop here, you get a pullback. There's a dark cloud cover, right? Dark cloud cover is a bearish indication, all right? And bearish indication happens, it pulls back. Now, again, what you wanted to see was the same thing that we saw here and here, right? This is a high reaction sell, boom, right? And we kept the underlying value, okay? So here, boom, high reaction sell, kept the underlying value, same thing, moved. Here, boom, doesn't do that, so it tapers off a bit more, and it was a delayed bounce to the time in which it needed to hit this trend, so it came down a little bit more. So that was from 365 all the way down to 340s, the 340s, all right? So as the demand slowed down, obviously they pushed it all the way back down to the 30s, right? Because now the buys aren't coming in as fast, all right? So let's completely remove that. Now we have all this information. So again, look at the sell side pressure, okay? What is the sell side pressure doing as the price is changing, right? Remember, the sentiment is long, right? The sentiment is long. So what is the sell side pressure doing here? Well, it's slowing down. It's getting smaller, right? Same thing that happened here and here. Without even looking at the 1 minute, we can see the sell side is getting smaller here on the 5, right? So how do we identify that if we're not in the trade yet, right? Let's say you have FOMO and you're like, I missed the trade. Like, how do I get in, right? That's perfectly fine. First breakout, boom. Same thing, right? First breakout, boom, retracement. Is this 50%? I would say so, somewhere near, right? But what's the positive about this one? Remember, I said retraces and pulls back to previous resistance, which is now support. There you go. Tap, tap, pull, fail, try, fail, crack, tap, break over, right? Confirmation number 1. Confirmation number 2. Underlying value is now 347. Okay? So if you're not in the trade as of yet, you're looking for sell side candles to slowly taper off and create 347 as the underlying value. So let's look at that on the 1. What time is this? 11 o'clock. 11 o'clock, boom, 47. Pops up, boom, 47. Holds it, boom. Falls below it, reclaims it, boom, 47 again. Okay? This is now the new underlying value. It was here, turned to here. Here, we didn't know as of yet. That's why it tapered off. The demand, the buys didn't continue to exceed the time and the price. Okay? So, it tapers off. All right? So it tapers off, cracks. Now you know what the underlying value is. So how do we know when it turns short? Is what I think Miki asked. I don't remember who asked the question. All right. So now here, if we apply the exact same thing we just applied, and now we have the biggest picture of the trade, right? Because you didn't have any of these answers before. Is that simple? Boom. So now look, 10 o'clock, cracks away from trend, boom, tapers off, comes back down, underlying value, pops above. Now look, retracement, decent, bullish engulfing, price push, break out of this, retracement, more than 50%, no price proceeding, right? Look, this is not a higher high. Breakout here, no price proceeding, more than 50% retracement, bearish indication number 1. Candle number 2 tries to break the same area, doesn't do it. You don't get 2 consecutive closes over that level of resistance. Okay? Again, same thing. Boom. You don't get 2 consecutive closes over it. Bearish indication 1, bearish indication 2. Pulls back, bounce, bounce, cracks. Again, this is the first distribution. This is the second. It cracks trend. All right. So you have 4 bearish indications right there. It cracks trend, and obviously they pack it on all the way to down here. Okay. So to answer your question, whoever answered that, the sentiment changed to short the moment that it cracked your master trend. And the reason that I'm calling it the master trend is it's because this is your portrait. Again, with anything in life, it has to start out with the brush. If you are an artist, it starts out with the brush. You don't just get paint and throw it on the canvas and it's an art, right? It has to start from somewhere. So all of this, you're in the trade perfectly fine. You know exactly when to scale. You know exactly when to add your dip. You know exactly when to add more. The sentiment starts to change. This is where it changes on ZELLA. And let's look at the rest of the chart. Boom, there's your fucking answer. All right. So sentiment changes here as it cracks your master trend, right? The first indication was here. The second one was here. Breaks up, tries to crack above it again. You never got 2 consecutive closes over 383. Never. Not once. Never. So you don't add. Okay? Simple. If you're trying to get more of a move, you're going to need to see it crack and hold above this, because the underlying value, which is here at 47, right, needs to be now this 83 level. Okay? And you never get consecutive closes above that. Never. Not once. First level of distribution happens here short. Second one happens here. Your buy pressure never came in, so they don't have to pre-exhaust. They don't. They add here for a feeler, push it down, they look, they're like, these candle sizes long are pretty relative. I can fit all 3 of these candles in this, or 2 of them at least. Okay? My hardest part is getting into a trade and not feeling like chasing. Your explanation is always informative. No problem. All right? They don't need to pre-exhaust. Okay? And we can see short side the same way we can see long side. So if you wanted to make money short and you wanted to know the answer early, I'm calling these shits out like 30 minutes before it happens. But you can, obviously you can see why. So, happens here. They don't need to pre-exhaust. It cracks that. They just add to it. Now, your previous level that you believe was the demand zone, the retail value, is no longer. Let's say you bought a PlayStation at $600 here, right? You bought it at $600. And then the price pushes all the way down to $300. Are you going to sell your PlayStation? No. Well, let's say if it was $600 and now it's $900. Are you going to sell your PlayStation? No. You're probably going to sell it when you start losing money on it, right? So here, first distribution, boom, here, second. This is not a consolidation anymore. And it's not a consolidation anymore because this was where you guys pick the last underlying value of it. So if the underlying value is $300, it has to come back to $600, right? Speaking about the PlayStation. Okay. If the underlying value is 300 and it's cracking this and now it's above it and then it's cracking back under it, clearly this is indecision, which is why this is not consolidation, because it's capitulation. And this is happening in between the distribution and accumulation. All right? So you can't take this until there's a tide change. Period. It needs to crack above this level to even decide to change and push this back. All right? Which is not going to happen. Here, everyone on the play that was a buyer that made money all the way up to here, do you think they're keeping their shares this entire way after they made all this money? No. So your buyers are now also turning into sellers. So now not only do you have sell pressure from the shorts, you have sell pressure from your buyers. So it's much easier for a short to make money this way. Much easier because now our past buyers are on our side. So this is not demand, because the moment this comes down, and someone smart is trading it, they're like, oh shit, this is no longer that level. I can fucking sell here and still walk away with some pretty good gains. This is now your last defense. If the accumulation doesn't happen here, you get killed. Because this was the first distribution here. This is the second. Remember, we spoke about their starter position, their second position, which is their median position, and then their position after they win the trade to get the realized gains is the last push to the bottom after they crack this one, right? So this is not consolidation, period. It's coming off of a high reaction sell. It's coming off of distribution from shorts. This is not consolidation. You say what you want, but it's not. Add it every time, you're going to get killed. All right? And remember how I explained to you it looked. It flushes to the bottom, it cracks to the top, it flushes to the bottom, it cracks to the top. Remember I said that? The difference with consolidation is it would stay within this range or within the range of the upper end. It wouldn't crack below the bottom over and over. All right? Every time it cracks below the bottom, this is just more shares that I can add or someone else can add as a short to their position, especially if we have it here. This is easier money because the moment it cracks, we're just making more money on the way down. Okay? Does that make any sense? So yeah, it's been short since 12:30. Whoever asked that question. So yeah, I'm not touching this trade until it has a tide change, and the tide change attempt would be above this level here, which is 373. So if I've already traded this, I'm never looking at it again until it hits my alert and says, oh, it tapped 373, and then we can get a retest at trying to get the rest of those shares out of there. But other than that, not taking it. Sentiment is short. It never changes. No reason to add here. No reason to add here. No reason to add here. No fucking reason to add. Period. Unless you want to play through chop the whole time. Getting less fuzzy. Thanks. Are you talking about my mic? Are you trying to shit on my mic? I'm just playing. All right. So hopefully that answers some of those questions for you guys. I can't speak today. I changed my diet, so I'm having a lot of brain fog. So I apologize. I can't think of any words for some reason. I can only join twice a week. Perfectly fine. This is my second voice session, so don't worry about it. Yeah, you're gonna have to on all these curses. Sorry about that. I need to clean up my vocab for sure. Does anyone have any questions? So this was supposed to be a lesson on short and long side sentiment and the ability to see whether or not something is short biased. So let's revert to that, right? Under this, where this accumulation happens, right? This is the first capitulation range. This is the second, right? And again, there is capitulation long and short, right? But this is capitulation between accumulation and distribution, which is more important because it's going to cause a higher reaction. All right. Now, again, look at it. Does this look like consolidation? Now that I explained it to you, touches the top, slaps the bottom, touches the top, slaps the bottom. Does that look like consolidation? Now that you know what the difference looks like? Fuck no. I mean, no. Sorry. Right? And after you looked at the sentiment and you saw how it was trading, right? You saw all this that we went through in the demand and how the demand tapered off and where the distribution happened, right? Does that look like anywhere on this chart that you should add it after the first run happened? No, right? So I'm going to give you one more thing and then I'm going to get out of here. Absolute brilliant explanations. Thank you. Anytime, Noda. And Broda, you're my guy. So I'm going to give you this real time. Well, show you how it's going to happen real time, and then I'm going to dip. Because a lot of you are going to be looking at it in a completely different way, and that's okay, right? I'm going to show you how not to get caught on the bear trap or on the bull trap if any of that shit was confusing to you. Okay? Now, here you're looking as a normal person. You're like, oh my god, ZELLA, wedge break, it's long. Right? even if you didn't know this sentiment was short here, you're thinking that likely this is going to be a reversal, right? Here's the thing. As I said, the first candle, ding, 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 never matters. Because the first candle is only an indication of an attempt for a reversal. Okay? Literally, that's it. So, it needs to confirm over that. Now, get a breakout. This is decent. Okay? The breakout is decent. You get the pullback here. The pullback, more than 50%, and is it near a key level of support that's now, resistance that's now support? It holds above it, right? So this is how they trap you. Sentiment short, this is where the trap comes. Pulls back. It doesn't pull to that support. And it gives you a price proceeding, right? But the issue is, this could have been a harami. This could have been a dark cloud cover if it would have been here to here. All right. So not only do you get the high wick rejection, but the candle's red. Remember, we want it to be green. The candle's red, high wick rejection, breakout. All right. But what's the issue? If all the sentiment is short, then again, what did we do before? All those high reaction sell ranges is what it needs to break above. This area here, it needs 2 consecutive closes over this. So as you can see, when it attempts this upper range, this one doesn't even attempt, this one doesn't even attempt, this one doesn't even attempt. It flushes. So on the breakout, it needs to revisit the closest level of that trend in which it tried to break above, because that's a level in which is now important. Which has been important because it tried it here, couldn't do it, tried it here, couldn't do it, tried it here, couldn't do it, crashed below it here. Couldn't have 2 consecutive closes here either, right? And now you see how it comes back to you here on the breakout. So the breakout happens, retraces, more than 50, price proceeding, but does not close over key sell reaction range. If I'm a short, this looks tasty. All right. You get rejected from the first. Second one, you get a push. You think. Third one, right? More than 50 again, you really don't have any strength. These long side candles, this one, all of these, do they look like these? do they look like ridiculously long? No. This candle is smaller than this candle, and this candle is supposed to be your breakout, but this one was a sell-off. So why do you think this one is long? I don't know. You tell me. This candle is the same size as this one. And this was just a continuation of the initial distribution of shares. So what makes you think this guy is long? I don't know. Pullback, trash, price proceeding, decent, but does it close over that key level of sell? No. Bearish indication 2. Bearish indication 3, candles red. Do you get a close over that level of resistance? No. You get 1. Do you get 2 consecutive? Yes, but what? 50% retracement. And then, obviously, doji, sell. So if you're long, does this look good? No. Right? Sells off. And before you even do any of this, you're red. Because you added on this break, and this is a bull trap. Simple. Well, not really simple, but, you know. It pulls all the way back to 330, 338, or whatever. And now, that sell area, you now revisit the previous level that you were supposed to break out of. But you just broke out of it, so why is it that you're fighting back over it again? Because before, when the demand started to taper off here, remember? I said, if the underlying value continued to exceed, like these, right, at that time, it would have just continued and it wouldn't have continued to sell off there. Demand came back in. So right here, this level now translates right back because it couldn't break above it and it sells off here. Then it used this as the underlying value. So now your underlying value, trash. Now it's below underlying value, right? So above underlying value, below underlying value. Above underlying value, below underlying value, aka capitulation. See how easy that is now? up, down, not consolidation. Consolidation would have been here if this didn't exist at the bottom. It would have been like, or, right? Not boom, 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 fail. And the reason why it sells off that hard, again, is because this is tier 2. This is the second round of being able to acquire those. All right, so boom, boom, we get some here. Long try to come in, boom, add some more, boom, green as hell, add some more, boom, green as hell, bull trap, nice try, kill you again, boom, oh, they think they're smart, add more, boom. Hold on, the lady's home. Okay, anyway, so does that make sense? Now, if you weren't here for the entire read or the entire session, that's perfectly fine. Okay? That's perfectly fine. So, you need to be able to see exactly. Babe, it's by your feet. What is it? I don't know. A moth? No. Hold on one moment.
The killer hornet from Spain.
Anyway, I'm gonna continue what I was doing. Anyway, so the sell-off happens here, and if you guys are in Momentum Voice, you guys know my girl is very she's present all the time. So you guys get some fun and some texture during the day. So yeah. Anyway, so the huge sell-off happens here, and obviously that was pretty easy to see. If we can get 2 images, one example of capitulation and one of consolidation showing the difference, that would be awesome. Oh, for sure, Father. Anytime. Let's pull up Microsoft because what percent of your total position do you guys like to scale out of? The percentage of my position that I like to scale out of doesn't matter. To be honest with you, when I add my position, I'm always risk first, right? So there's multiple ways I can do it. I have a thread on risk management, but I'm always risk first, right? So as you can see, no matter what the trade is doing, I will be able to make money on the trade, period. Whether it's going up, whether it's going down, whether you think it's too much money here or you think it's too much money here, I'm going to be able to make money on it. All right? So to answer your question, let's say I noticed that the underlying value is here, right? And let's say I didn't have this line. I noticed the underlying value is here, and I think that this is the resistance. The moment that it pops anywhere near here from this ad, I'm selling half, right? I'm going to sell half because if it pulls back down to here, I'm going to be red. Why? Because that's going to secure my risk all the way down to here if I were to get flushed out. Not only that, if I sell half and then I use the rest of the half of my shares and I put it at break even, which is my ad spot, if it comes down and kills me out to here, I'm still green because I sold up to here. So there's no losing. Is it possible? Yes, you're not always going to get the perfect ad, right? But the beauty about that is this. If I were to do that here, right? And it pops and I sell 50 and then I add my my position. Oh, well, sorry. It pops 50 and I sell half my position, then I add my stop at entry. When it comes here, as long as it's trading along the time in which the price is supposed to exceed, like here, I can add to my winner. And my average is still lower than the price action is right here. So it comes, boom, I add, my share size is bigger again, right? So I'm still profiting off of this entire move while I'm securing my risk. Okay? To answer your question. Does anyone know if you have a physical stop in place or use active trader to sell the bid on? I don't have Webull. I have TD, but it really depends on the situation. Sometimes I use mental stops. Sometimes I use hard stops. Within the past 2 months, I've been using more hard stops because we're getting closer to sentiment in which I see a big change happening, which I've saw since I think last Friday or Monday. So I started to dial back a bit since then and just been using like a lot lesser size and just using my hard stops because I know the knives are going to be more extreme now than they were before. I
have a request.
Fee-Man, I would do neg, but I that was supposed to be the last thing that I was supposed to do. Can you initiate my voice again? I didn't. Oh, can you initiate my voice again? I didn't know I sounded like that. I don't know how you sound, but that's just the one I gave you. Would love to see like a top 10 summary list of methods used for determining entries. I'm not sure what you mean by that. Again, brain fog. As far as entries go, again, I'm looking for long sentiment, or I'm looking for a change in tide in which the value is now increased, right? So let's say I didn't see any of this, right? I'm looking for a break of trend like this, so let's say I'm not in the trade yet. This breaks this level, cracks, 50% retracement. That's sign number 1, outlier candle, right? Sign number 2, it pulls back, high wick rejection, and above previous distribution phase for shorts. I can add some here. Obviously, my risk is just below this candle. Okay, so I'll add that. As soon as it pops, I'm scaling some. Pop some more, scaling some, obviously, and just continue that. So if my average is down here, when it comes to here, I can add more and just continue to ride these higher lows now. Right? So, again, it doesn't matter where I see the trade. I'm going to make money. I don't have to catch it here. I don't have to catch it here. I could have caught it here and did the same thing. Right? Yeah, so hopefully that answered your question. Gonna have to hop off for dinner. Is neg review recorded? I did not do neg. I was just, this session wasn't even supposed to be to go over specific things. Do you play options the same way? Someone else wrote while I was reading that. Do you play options the same way, in a sense? The way that I play options is very calculated. I look for a certain OI, a certain delta, a certain theta, a certain gamma, a certain vega. But kinda, right? Kinda. I'm looking for the short side to taper off generally, or I'm looking for really strong demand. Same thing. Before I add, and I'm looking for confirmation. Generally, like 2 to 3 consecutive closes. Generally 2, depending on the sentiment. 2 consecutive closes over a certain level before I add, and then when I make some profit, I'm gonna scale some, leave the rest, and let it ride as long as I can continue to get those higher lows. Breakdowns analysis. Yeah, no problem, Chris. Again, this right here is why I messed up today and down a bit, but I am trying to recover. Yeah, Mr. Krabs. A lot of people like you, Mr. Krabs. I've never spoken to you, but what's up? Father, Broda, any questions? We'll give you guys about 9 more minutes, and I'll hop off this at 6 p.m. EST if you have any questions. Just to be fair. And again, thank your boy Berkey for this, because Berkey gave me the time to get on. He didn't even ask. He kind of did, but he kind of didn't. He was like 625. I mean, he was like 425. I was like, sure. To be fair, thank you. I appreciate it. Do you have a summary of your options process in pins or Twitter? I read all your others. I do not. That would be a good thread. So I'm gonna actually write that down on my phone. I'll do a thread on options for you guys if you want. Neg inside date today. My new thing I learned. Broda swings. Broda is the man. Appreciate your time. Anytime, bro. Any questions? Again, if you have any questions, now's the time to ask, because I am never on the trading floor. I'm generally watching the momentum floor or helping people one-on-one throughout the day, because I'm always backed up on my DMs. Was it a moth? Yeah. After initial time, price break, 5-minute example, do you ever revisit the time price? Always. It's going to alter throughout the day. Always. It's going to alter throughout the day. Like, continuously. So you just need to know. Like, for example, like, this one's 10 o'clock, this one's, 11:45. So I generally look for the pulls that are, like, within a certain area. So this is about a 10-minute stretch. It's the same thing. So 10 minutes. These two are 10 minutes. So if it bounces and it comes down, I have a gauge from like 10:50 to 10 to 11 o'clock, then 11:25 to 11:30. So that's about 30 minutes. So in 30 minutes, which would be the 12 o'clock, it should pull back. And here you go at 12, it pops, you get that extended pull, and then the pullback happens at 12:10-ish. So you can also time that same way. Appreciate it. So no neg. No, the lady just got home and brought me food, and there was a moth if you missed that. So I'm not sure if she caught it, but I'm gonna have to catch it. She thinks she did.
I think I hit it with my handle. I just can't find it. I got a vacuum.
Okay, so she hit it, as you guys can hear. Anything else? What time does Momentum Voice start tomorrow? We haven't been on Voice for a week, I think, or about like 4 or 5 days. I've been doing exactly what. Who was that? Someone asked about options. I've been helping them understand how to do valuations like Shark Tank, and doing some option studies with a few of the people that send me DMs and a few of the people that need to learn it like throughout the day. Hot food or MTA, you choose. Balls in your court. Oh shit! I love Berkey. He's hilarious. For dip ads, do you like to use the 50% 61.8? I only use Fibonacci retracements when there's a brand new level in which the action has never reached before. So if it's like a brand new IPO, if it's a brand new breakout or a brand new area in which it's never traded before, that's when I use the fibs. Yeah, I get to see the entry every time. Oh, you're not talking to me. Yeah. What else? Any other questions? 5 minutes on the clock. There's like so many people in here, I think. I don't know. I can only see the first few. But Cecil, no questions. Chris, no questions. Ko2Boo, no questions. Your DM's open about your options process. Yeah, sure. Is there 2 Eslos in here, or am I confused? Thanks for your time. Appreciate the lesson. Anytime. There is 2, right?
There is 2.
Okay. Anytime, bearded. And don't worry about that. There's 2 of me. Yeah, there's a ESLOH, I believe. Can't wait to play by play in real time when Yeah, we do this in this happens in Momentum Voice a lot, but it's happening real time. The difference is like real time it's just a little bit different because it's happening so fast, right? In real time I'm like, it needs to hold this level, it's pulling back to this amount, we need to add here, we need to see if the underlying value happens here, we can add more dips here, this is where I'm adding, I'm scaling here, move your stops up, etc. That's how Momentum Voice goes generally. It's much quicker, so and if anyone has been on Momentum Voice, you know, you can explain to them how that goes. It's much quicker than this reading process was for you just now. I'm like, yeah. So if you see a stock that is popping, where will you typically add your initial position? Do you wait for a pullback confirmation to hold an intraday support or daily resistance? Another great question, Ventilate. So the way that goes, when I'm personally looking for something, again, as I said previously, I can add anywhere on the chart and make money. But let's say, wait, what are you asking? I think I just answered it. Where do we typically add your position? I generally add my position wherever I see value, to answer that question. But again, I use the weekly 20-year and I use the daily 10-year. I don't really. When I first started, I used to use the monthly chart a lot, and I used to like try to overcomplicate things. But I just use the weekly 20-year and the daily 10-year.